Welcome back to the deep dive. So you sent over some really interesting market reports focusing specifically on Spokane.
Yeah, Spokane's office market looking at the first quarter of 2025.
Right. And our job here really is to sift through all this data, pull out the key takeaways about how things looked in Q1.
Exactly. Consider it your focused briefing. We're hitting vacancy, rent trends, sales activity, the whole picture for early 2025.
And just glancing through these, the first impression I get is that Spokane, well, it seems to be playing a different game compared to a lot of other office markets nationally.
That's a really good way to put it. It does feel like it's operating on its own track. And the numbers, well, they definitely support that idea.
Okay, let's dig into those numbers then. What are the stats that really make Spokane stand out here in Q1 2025?
All right, so looking back over the 12 months leading into Q1, we saw about 33,800 square feet of new office space delivered.
Okay, not a huge amount.
No, relatively modest. But net absorption, that's the key figure showing demand, right? How much space was actually filled up. That was positive, around 50,700 square feet.
Positive absorption, that's good.
It is. But the real headline grabber, I think, is the vacancy rate. In Spokane for Q1, just 7.8%.
Wow, 7.8. That sounds
Mm.
low, especially given everything we hear about, remote work and rising vacancies elsewhere.
It is low, extremely low compared to the national picture. The reports peg the current national average office vacancy at about 13.9%.
Okay, so nearly double.
Almost. And forecasts mentioned here suggest that national rate could even push past 16% by Q2 2025.
So Spokane's sub 8% really does highlight a much tighter market, doesn't it?
Definitely. It suggests finding available office space there is comparatively tougher.
Makes sense. And what about rents? Is that tightness translating into like skyrocketing costs?
Well, the rent growth has been more measured, I'd say. Over the past year, market asking rents went up about 0.5%.
0.5%. So positive, but not exactly explosive growth.
Right. Steady, not soaring. The average asking rent itself is around $21 per square foot. That's on a gross basis, mind you.
$21. And that's quite a bit lower than the national average you mentioned earlier, right? I think the report said something like $36.
Exactly. National average around $36 per square foot. So, yeah, Spokane looks considerably more affordable on that front. Businesses are getting more space for their money, potentially.
So, okay, low vacancy, more moderate rent growth recently.
Hmm.
What's actually driving this tightness in Spokane? Why isn't there more empty space?
A big piece of the puzzle seems to be the lack of new construction over the long term. The reports point out that over the last decade, the net increase in office space was only about 600,000 square feet.
Only 600K in 10 years. That seems really low for a growing area.
It is. And that figure already accounts for space that was taken off the market. About 250,000 square feet was actually demolished or converted to other uses.
Ah, okay. So very limited new supply hitting the market.
Precisely. That constraint on the supply side is a major factor keeping the market tight.
And I guess if you're not building much new stuff, but businesses still want space.
Then the existing space gets filled up. And we saw that happen. The leasing activity in 2024 was apparently very strong.
How strong are we talking?
The report calls it the strongest in decades. Nearly 1 million square feet of new leases signed in 2024.
1 million square feet. Wow.
Yeah, and that's about 30% higher than the average annual leasing volume they saw in the pre-pandemic years, like 2015 to 2019.
Okay, so a significant uptick in companies signing leases last year, even without a lot of new buildings.
Exactly. Existing spaces were clearly in demand, and the outlook, the forecast suggests this kind of stability, this low vacancy, is likely to stick around for the next couple of years, too.
Interesting. So resilience seems to be the word.
I think so, yes. Now, going back to rents for a second, while that 0.5% annual growth is, okay, the report highlights something more impressive long term. Over the past 10 years, the cumulative rent growth in Spokane has been 33.2%.
33%.
Okay.
That paints a different picture than just the last year.
It does, and it actually beats the national cumulative rent growth over the same decade, which was closer to 22.5%.
So slower growth recently, but over the long haul, Spokane rents have actually outpaced the nation. That's surprising.
It suggests a consistent underlying demand, even if it's not always showing up as big annual jumps lately. Long-term strength.
Okay, that makes sense. Can we get a bit more specific? Like, where was this demand showing up? Did the reports mention any particular buildings doing well?
They did, yeah. They highlighted a few places with significant positive net absorption over the last 12 months. The Crescent building, that's downtown in the CBD, absorbed almost 66,000 square feet.
Okay, downtown still active?
Yep. And out in the Valley submarket, Liberty Lake Business Park took up nearly 60,000 square feet. Meadowood Technology Park, also in the Valley, saw over 42,000 square feet absorbed.
So demand spread across different areas, not just concentrated in one spot.
Seems that way. And they also gave examples of some of the bigger leases signed recently.
Oh, yeah. Like who's moving in or expanding?
Well, for instance, just in Q1 2025, Primera Blue Cross signed a lease for over 30,000 square feet on East Sprague Avenue.
Primera, okay. That's a known name.
Definitely. And looking back a bit into 2024, Spokane colleges took over 26,000 square feet at River Point 1. And Multicare's Pulse Heart Institute leased over 21,000 square feet, also on East Sprague.
Got it. So healthcare, education, significant commitments there makes the market feel more tangible than just, overall stats.
Absolutely. Seeing the names and the space sizes involved really grounds it.
All right, let's shift gears a bit. What about the sales market? Are people actually buying and selling these office buildings in Spokane?
There's been an uptick there recently. The reports mention that Q4 of 2024 was actually the strongest quarter for office sales since way back in Q2 2023.
Okay, so some momentum building at the end of last year.
Yeah, some renewed activity in the investment space.
However, isn't there?
Well, the total sales volume for all of 2024 was still down compared to previous years. So that strong Q4 wasn't quite enough to lift the whole year's number significantly.
Great. So a recent improvement, but still lagging overall. What's the expectation for 2025 then?
The feeling seems to be more optimistic for this year. They're anticipating stronger sales volume in 2025, partly driven by some larger deals in the pipeline,
What kind of deals?
especially owner-user sales, where a business buys a building for its own operations, and also sale-leaseback deals.
Ah, the sale leaseback, where they sell the building but stay as a tenant.
Exactly, frees up capital for the business, and there was one really big sale highlighted.
Which one is that?
The Spokane School District bought the River Point 1 building. That was a $12.2 million deal.
The school district? Buying an office building. Interesting.
Yeah, and the report suggested it was seen as maybe a more cost-effective move for them compared to building something new.
Okay. That makes sense in today's construction cost environment. Now, you mentioned investment.
Yeah.
What about cap rates? How are those looking in Spokane? Maybe just quickly explain what a cap rate.
Sure. So the cap rate, or capitalization rate, it's basically a quick way to gauge the potential return on an investment property. You take the property's net operating income and divide it by its market value. A higher cap rate generally suggests a higher potential return, but maybe also higher risk.
Got it. So what's the story with Spokane cap rates?
They tend to be higher in Spokane compared to, say, big coastal markets like Seattle or LA. The average cap rate for office sales over the past 12 months was around 7.2%.
7.2%. And the report noted that this actually helped buyers.
Yeah, the idea is that starting with a higher yield gave buyers a bit more cushion, more flexibility, especially as interest rates were climbing. The average price per square foot for buildings sold in the last year came in around $156.
$156 a foot. Okay, so potentially better initial returns for investors there. Any other specific sales mentioned besides River Point 1?
Yeah, a couple. Monroe Court sold in December 24 for about $11.35 million. And another property out on Mirabeau Parkway sold around the same time for roughly $9.1 million.
Okay.
Though it's worth noting that Mirabeau Parkway property was apparently fully vacant when it sold.
Ah, okay, so a different kind of play there. Good examples. Now, all this office market stuff doesn't happen in a vacuum, right? What's the broader economic picture in Spokane?
Right. Context is key. Spokane is positioned as the main economic engine for the whole inland Northwest region. Its location makes it attractive for transportation and logistics. You see companies like Amazon expanding there.
Yeah, logistics makes sense. And the airport's expanding too, isn't it?
It is, yeah. Spokane International is undergoing a major expansion, which kind of signals confidence in the region's growth.
And how's the overall economy performing? GDP growth?
In 2023, Spokane's GDP growth was actually slightly above the national average, kind of middle of the pack compared to other Pacific Northwest metros, but still positive growth.
And the type of industries are changing too.
Yeah, there's been a definite shift over time, moving away from the old reliance on natural resources more towards sectors like education and health services, government, and also wholesale and retail trade. Diversification.
Which probably helps stabilize things, including the office market, right?
Right.
Less reliant on one single industry.
Absolutely. Diversification generally leads to more resilience.
One last economic point that caught my eye was about housing.
Affordability challenges.
Yeah, that's a big one. Like a lot of desirable places, especially post-pandemic, Spokane has seen housing costs jump significantly as more people moved inland. Population growth is good in many ways, but
It makes it harder for businesses to attract workers if they can't afford to live there.
exactly. That housing affordability piece could definitely have downstream effects on the office market long term. It's something to watch.
Definitely. Okay, this has been a great breakdown. Now, if someone listening wants to get even deeper into this, maybe they have specific questions about a property or a submarket in Spokane. The report mentioned a contact. It did, yes. For more detailed discussion or specific questions on these Q1 2025 findings, folks can reach out directly to Eric Peterson. His number is 509-903-9077.
Perfect. So Eric Peterson at 509-903-9077.
Good to know.
All right, so wrapping this up, the big takeaway for me from Q1 2025 in Spokane's office market is really its distinctiveness. Low vacancy, that strong long-term rent growth, even if recent growth is flatter, and this recovering sales market with those higher cap rates. It's just not the same story we're hearing everywhere else.
I agree. Resilience is the word that keeps coming back. It seems driven by that limited supply pipeline meeting, pretty healthy demand, certainly in leasing, and its own unique investment dynamic.
Which really leads to a final thought, maybe something for our listeners to chew on. Given those housing affordability issues we just touched on, how might that ultimately shape the long-term appeal of Spokane's office market for
Sure.
both the businesses and the employees they need to attract?
That's a critical question.
Or, looking at it another way, with leasing being so strong, but new construction so limited, what kind of innovative solutions might pop up to meet future demand for office space there? Will we see more conversions? Maybe. Different uses of existing space?
Yeah, how does the market adapt? Those are definitely the big forward-looking questions that emerged from this Q1 data.
Absolutely. Well, thanks again for sharing these sources and letting us dive deep into Spokane with you.
My pleasure. Always interesting to see how different markets are navigating the current landscape.
Indeed. Until the next deep dive, everyone.